Video lesson 3.6, setting stop loss, take profit, and basic trade management. Some topics we will be going over today are basically setting stop loss and take profit for our M&W trade setup that we have discussed in previous video lessons. So, we will be discussing going with and against the trend, setting stop loss, and managing the trend or managing the trade for both scenarios. Also, how to set your take profit zones by determining where liquidity zones are and following the trend, and also spotting the highs and the lows of the day or previous highs and lows of the week, month, so on and so forth. So, trade management, moving stop loss, basically moving stop loss to break even, when to do so, and how you know you're safe to do so. Setting yourself up to get the best trade and have the best possible stop loss range or smallest stop loss. Zone shifts in the zone when price quickly moves out of the high or low range that it was working and shifts the zone, shifts price out of that zone. Once that happens, you should be safe to move your trade to break even. So, moving forward, this is the Euro US dollar on the 15-minute chart, like usual. What we see is a large uptrend. It's been uptrending for weeks now. And what you can also see on my chart is red and blue boxes, or red lines and blue boxes. Now, what these represent are the red lines represent W formations that you could have bought the second leg of the W at and went with the trend. Every available W going with the trend London session. So either right before London session, or exactly at London session, or during London session. If a W occurred with the trend at that time, I have it traced in red. So look at all these opportunities you have to go with the trend. But yet, there are so many times that we find ourselves, or I find students going against the trend, looking for M's, trying to catch that massive move, when really the massive move is right in front of you. You could have caught all these W formations and added onto your position with little to no drawdown, going with that trend. Now that trend was at the very bottom here, and this is a very small piece of it, but this was a 767 pip move upward from this top here to the bottom here. So that's 760 plus pips that if you caught it right here and just kept adding on to these W formations that occurred either London session or New York session as well. New York session, W formation here, the second leg. You could have caught it there. London session, second leg, W formation. Now, what is so unique about these trades is that you can trade them with very small stop loss. So, for example, take this W formation, for example. We can see it is New York session. Price has came down, has spiked down all the way to this low, this 1.12 whole range, and is creating or is spiking into this price range at 1.112. So upon seeing that, upon seeing this low being created with this wick, we would want to look for a W formation, which we see right here. That W formation, you catch the second leg off of this low right here, catch that second leg using the railroad track as a confirmation, this railroad track right here. You buy right here. You buy after this second leg, or you catch the lowest point here. That's going to be your goal in the future, to catch this lowest point here and then have a stop loss as small as possible. If you caught this lowest point here, your stop loss could have been less than 2 pips. Let's say you have, let's use going with the spread, or I'm sorry, going with the trend, let's use a 10 pip or 15 pip universal stop loss. So every single one of these that I have underlined in red would have been safe with a 10 or 15 pip stop loss if you caught that second leg. So all the red ones, and then look at the almost instant profit. Well, yeah, basically instant profit and then a massive profit. They're massive trades, you guys, massive moves when you go with the trend. Now, managing these trades, managing the W's going with the trend, how would you do this? Well, once you see that shift of this zone, so for example, right here, here's this zone, the consolidation zone that we are in. This is it. Once we see that second leg of the W formation, which could have been, you could have bought here, or they gave you a second option here, or even at this wick here. Once price breaks out of this consolidation range, you can place stop loss at break even, or you can choose to place it into profit somewhere in this range, 10, 15, 20 pips, depending on how big the move was. Now this was a 100 plus pip move. You could have placed your stop loss at break even and traded this as an intraday or a swing trade, excuse me. Swing traded this for several days, and a week later you're in 300 pips profit with stop loss at break even, correct? So placing stop loss at break even. Now remember guys, stop loss is a tool. I have a lot of people saying they don't want their stop loss hit and whatnot. These M&W trades, these M&W formations are used. We use stop loss as a tool with M&W formations. So stop loss is a tool that is super beneficial to us. Some of us, some retail traders think that it is not necessary, but for us it just filters out the bad trades, and we can have stop losses of 10, 15, 20 pips being hit every once in a while. But when our take profits are hundreds of pips, our risk reward ratios are 1 to 5 plus 1 to 10, 1 to 20, then we don't have to worry about our stop losses being hit. That's retail traders think of it as just this sliver in their mind. Their stop loss was hit. Oh, for us it doesn't even matter. Oh well, whoop-de-doo, stop loss was hit. Okay, now going against the trend. First of all, stop loss, your stop loss. Each stop loss will be different. I want you guys to do your own research. Now, I have made this video lesson kind of short because there really isn't a universal stop loss that you can use for all trades, all pairs on every M&W scenario. So I want you guys to go over every pair that you trade and see on the main ones how large the normal stop loss is at the high or the low of the day. So for example, we're at the high of the day on the euro. We have this wick to the high of the day of 15 pips. Now that may or may not have stopped us out if we bought in this area, having a 15 pip stop loss. So you may want to rethink that, maybe have it up it a bit, a 20 pip stop loss, but remember you are going against the trend. It is riskier, obviously. When going with the trend, you will need you should have a smaller stop loss. You shouldn't really need that large of a stop loss. So let's go on to basically the stop loss. What I was saying, for example, every pair has it's different. The GBP JPY, for example, it'll have stop loss, stop hunts, wicks like this to the high of 20 to 30 pips on an average. Now, this is averaged out, and you guys can take that and use that to your advantage. It doesn't have to be a bad thing that they're these huge stop loss or stop hunts. I'm sorry. And so the stop loss is, like I said, a tool, and you guys should go over each pair and see, day by day, the average stop hunt range. Now here we see a larger wick, probably about 15 pips or so. Once again, these aren't really these just happen every once in a while. I would say this is not a average for Euro USD. I would say that's a maximum stop hunt. I've seen about 20 pips be the maximum stop hunt on the second leg of the M's or W's for Euro USD. Now, going against the trend, the blue boxes, the take profits we want to have as 30 to 50 pips. Now, take profit 1, 30 pips. Move your stop loss to break even, and then go for take profit 2. So, in other words, at take profit 1, for example, if you took this M going against the trend, here is at 30 pips, take profit 1 right here, and then 50 pips is take profit 2 right down here. So you want to, upon having price shift out of this zone, correct? The shift in the zone in that one candle, you see here, we place our stop loss into profit, back into profit. Now our stop loss was right up here at 15 or 20 pips, correct? So we have now placed our stop loss at break even. We have a risk-free trade, and that shift of the zone has now occurred. 2 candlesticks later, both our 30 pip and 50 pip take profit were most likely hit. Then what do you see? Once again, we have that W formation. Here's another W formation that occurred with the trend. You could have taken this, could have taken this W formation as well, going with the trend. Perfect example of the daily structure. Perfect, absolutely perfect playout of the daily structure in Forex. We have the Asian session range, then the breakout London session, the M formation. The high was created right here, and then the second leg London session to the high. Also accompanying that second leg is the star formation right here to the high of the day, and then we have the move to the low, spiking to the low. The low was created here. The close low was here, the close of that candle. We then see that large W formation, and then the day closes, or I should say the range. Well, yeah, the day closes at session changeover in consolidation. We have once again the same thing, W formation going with the trend, and then that small M formation at the very top, coming back into London session, or into Asian session range, the M formation at the high, then there's that spike to the high. But alright, staying on topic here, the take profit going against the trend. Stop loss, like I said, you guys need to experiment with that yourselves, but make sure as soon as the shift in the zone occurs that you place your stop loss to break even. Now, here we can see that small M formation at the high of the day. You could have taken this as a sell, and there is 30 pips right before session close. And then if you wanted to go even further, your 50 pips caught it in about 15 hours. You could have stopped yourself out here, or just kept moving your trade, your stop loss. When you move your stop loss, be sure to move your stop loss to places that are of liquidity that will most likely not be hit. I mean, that's pretty obvious. It's pretty obvious that I say that, but to give you an example, the highs of the day, when you're going against the trend, here's the high of the day here, the high of the previous day where we entered, the high of this day. Now, if you placed your stop loss and kept moving your stop loss to the highs of the day, your stop loss would be safe each day until this move occurred, and you'd be stopped out right here at about 50 pips profit. So it's really important that you guys realize that 50 pips is kind of the sweet spot. It's when going against the trend, that 50 pips is really a gift. It's really a gift. And if they give you more than that, for example here, they gave you more, they gave you 100 pips, they're going to take that back so fast, faster than you can imagine. For example, here they took that 100 pips back, 100 pips back in 2 hours and 15 minutes. It took them 1 hour and 20 minutes to drop 100 pips. Excuse me. 1 day and 20 hours to drop 100 pips. I'm just getting everything confused. I don't even know why. I think I'm nervous on camera or something. Alright, so against the trend once again. Here we have that small M formation, that spike to the high, and then this is London session as well. If you did take that, could have gotten out 30 pips here, and then 50 pips right around here in less than 6 hours. Here once again, here was this is an optional trade, but it was pretty obvious M formation, very large spike to the high. Now the high of the day was right here at around 1.184, and then that second leg spike was just about 5 pips from the high, and that is right around New York session. You could have taken that for 30 pips and then closed out before session changeover with your 30 pips. Here we have once again, going against the trend, we have London session. Basically all of Asian and London session was going and working this high until New York session. They kind of pulled out of this high range And then NFP, New York session, was that massive drop. I believe NFP was right here, and NFP caused the catalyst to spike out of this zone here. So you can see the highs and the lows are really important, you guys. The low here, the low of this day, was created inside of this range, and then this range was quite hard to break until NFP, where they broke out of it. You could have taken this as a sell right here. You didn't even need to sell up here, but that's basically what we teach. We teach to sell here instead of being a breakout trader, because breakout traders are losers. We're not losers. Alright, so here's the M formation. London session at the high. Could have caught that right there. And then your 30 pips, 50 pips. Easy. Piece of cake. 3 hours and 15 minutes. And you're out. Or, like I said, once that shift in the zone occurs, place your stop loss at break even, and there's 150 pips for you. 150 pip move until you see that W formation right here, and then you take profit at the second leg of this W. So that would be 143 pips for you. 143 pips. Very nice. So I've went over mostly everything I can think of, besides really managing your stop loss, or I should say managing your trade when going with the trend. But I guess that's kind of different, on each pair. But I don't know if I want to go over that, because it is for basically swing trading, and what I'm going over is mostly intraday trading. But what I advise to you, if you are swing trading with the trend and you are the one taking these red trades, these red line trades here, place your stop loss at break even and then just go with it. Go with the trend as long as possible until you see a large consolidation area. So for example, if price does not break this high and continues to consolidate and doesn't break this high here for over a week or two or 3 or a month or 2 months, then expect a reversal. Right? So don't be looking to close out your trade if you're going with the trend and you have your stop loss at break even until you see some type of, the dealer showing that he is about to collect orders. He's collected as many orders as he can. He's consolidated in a range as long as possible, and the high is not being broken. You can expect that reversal to happen. But until then, do not get yourself out of that trade. If you are swing trading, that's basically my advice for your trade management when going with the trend. Otherwise, going against the trend, 30 to 50 pips, take profits, and stop loss is it varies for different pairs, but universal stop loss should not be more than 30 pips. If you catch the high You want to catch the high as close as you can within 5 pips, 5 to 10, no, not even 10 pips, within 5 pips. If you guys can catch the high within 5 pips or the low within 5 pips, 5, 6 pips, then you're golden. You can have that 10, 15 pip stop loss and not worry about anything. Now that, like I said, that varies on different pairs. That's different for each pair. Now, this is really all I wanted to explain for you guys today for this video lesson 3.6. I mean, this is really self-explanatory. Once the M or the W formation has been shifted out of its consolidation and it has, shifted in its zone, place your stop loss into profit. You can feel safe with your stop loss at 50 pips. Voila, 50 pips. And then move your stop loss 30, each 30 or each 50 pips. You go, right? So you can be that person or you can be the conservative person. And you can just move your stop loss into at break even and then take profit at 100 pips once it meets 100 pips, or take profit at session changeover, at New York session, Asian session changeover. That would be the close, right before close. So yeah, I mean, that's really basically self-explanatory, you guys. And you can, mix this up, mix these up, mix the M and W formations up as you please. You don't have to take profit at 30 or 50 pips. I have someone in my group that trades them, and he takes profit at 20 pips. And I mean, he banks. He's caught over 5,000 pips in, I believe, 2 weeks just trading M's and W's, high and the low of the day, like I taught him to, and then at the 20 pips, which is usually the shift in the zone, he told me, usually at 20 pips, he takes profit. You see 20 pips right here, the shift of the zone, he will take profit, take all of his profit. And he usually trades with larger lot sizes. I've seen him trade with 5 standard lots, and he will catch 20 pips a day, 20 to 30 pips a day, not even going for that 50 pips. He's not even greedy about it. But, he's still learning. He's still learning how to do it. And he will eventually be able to catch those 50, 100 pip moves. And this, that, for example, is going against the trend. Obviously, going with the trend, there's much more opportunity. So, thank you guys. That was a wrap for this video lesson. Hope you enjoyed it. Until the next one, 3.7. Peace out.